What's up, traders? Today is Tuesday, October the 6th. Hope you had a green day. Hope your trading was good. Wanted to talk real briefly about a trade that we made on PPSI. So, of course, this is what we look for. We are known for getting into trades that are 100% and up. So, that's my weather channel. Sorry. So, want to draw these trend lines and walk you through what we're looking at when we make this trade. Now, obviously, Pioneer Power Systems, for it to make some move like this, with volume like this, there has to be a catalyst. What is the catalyst? Well, let's see. Back to my video, there's a hurricane brewing in the Gulf of Mexico. What does that mean for the stock market? Nothing, unless you're benefiting from storms, which are power solutions, power supplies, generators, things like that. So let's see what PPSI does. So I'm going to right click, get these fundamentals, and see what they're about. Pioneer Power Solutions manufactures, sells, and services a range of specialty electrical transmission, distribution, and on-site power generator equipment. Okay, bam, that's all you need to know. You don't need to do 3-5 days of due diligence. It's not that serious. Okay, so this stock, of course, starts running when they announced that Hurricane Delta was coming into the Gulf of Mexico and could make landfall in the United States. So that is going to cause, number one, a spike in volume, which is going to cause a spike in the price, which is going to cause this to run, because their business should pick up exponentially with all of these power outages and things that are going to be happening as a result of the storm. Okay, let me draw trend lines to walk you through this step, through this trade. Okay, so right now I always talk about consolidation. What is consolidation? Consolidation is a stock trading sideways until the market decides whether it wants to run it up or sell it off. Okay, so in every big move, there's always consolidation. There's always sideways trading until a stock gets ready to move. So what we did was, look, we don't want the stock to take off at the market open, okay, because they always pull back as fast as they run up. We want a stock to go sideways and then make a more powerful move upwards. So when I saw this 5, 10, 15, 20, 25 minutes, I knew when it started to break, it was the right time. And look at the volume. Look at the volume spring up. Okay. So I got in at 350. Okay. 341 actually. So again, we talked about channels. What's a channel? A channel is a range that the stock is in that it can't break in, it can't break out of. So the range was 318, 280, 340, 280, and this range gets smaller and smaller and smaller. It has to go somewhere. So when it breaks out, like I said, like I've always said, when it breaks out of this consolidation, then this becomes support. So once we get comfortable, once this stock made a move up, we got comfortable, we set our stop limit. Set your stop limits where you bought the stock from. That way, if it pulls back, I break even, or I break with a little bit of profit. So when it made this first leg up, we call this a leg, you know, when it runs before it pulls back. We ended up getting putting our stop in at this next leg up. Okay, you see how it tries to break this level? Okay, it turns into resistance. So for 15 minutes it tries to break before it finally moves up. It made an explosive move, and so we moved our stop up to here. Now, as you can see, support ended up being around $5. Okay, but it ran up to 650. So I thought it was safe for me to go ahead and put my stop right here, you know. And so when I put my stop right here, obviously it pulled back and stopped me out. Now I wanted to get the rest of this move, but unfortunately I didn't. But here's the thing, You know, I'm in at 350. You know, the stock goes to 425. I move my stop up to 425. So the least I can make off this is getting a move from 350 to 470 to 425. Now when it goes up again, I'll move my stop up to $5. Okay. Now the least I can get, because I put a stop sell order, a stop limit order, and the least I can get is going to be $5. So now when it runs up to 650, I started to leave it down here and give it some room, which probably would have been the right decision, but we see these stocks sell off really hard, and then you'll end up letting a winner turn into a loser. So I put my stop in at 580, got stopped out. It pulled back to this resistance level, and it ran up to 943. Nothing I could do but risk losing a lot more. So I was pretty happy with the trade, even though I left a lot on the table. So if you have any questions, feel free to email us at greenwoodstocktrading@gmail.com. You can DM me. We are available for coaching. And so if that is what you are requesting, let me know. Like, share, subscribe, comment, and we will see you on the other side. Hope you have a green trading day tomorrow.